As I have said in previous notes, COVID-19 issues aside, one of my biggest concerns has been the value of the dollar. In short, an elevated dollar is not good for the global economy and also means tightened financial conditions. So when the Fed announced the liquidity swaps, I said it was a bearish event for the dollar. And indeed, the dollar corrected, especially with exotic pairs, however, not as much as I hoped for. Something else, I was expecting swap lines to exceed 1 trillion. So when I checked to see where swap liquidity was several days ago, I was very surprised to see that the liquidity facilities were starting to unwind already. And my question is that the end of the dollar funding problem? Was that it? If so, were we all wrong as to the extent of the dollar funding problem? Very difficult to tell. However, other factors might have come into play. For example, the Fed's balance sheet has risen by about $3 trillion so far in this crisis. While it is difficult to quantify, perhaps a lot of that money has been used to fund these dollar positions. Or perhaps those who needed to roll over positions simply decided to sell to the Fed. It's difficult to tell what is going on. However, the most important question is this a bullish or bearish event for the dollar? Overall, I think bearish. Reason being, if corporations around the world don't need swap liquidity, then it means that the funding problem was not what we thought, or that the problem has been alleviated, or that the Fed asset purchases have somehow fixed the issue. The bottom line is that the Fed liquidity swap lines opened with major central banks around the world are starting to unwind. This is good news for economies that were under dollar stress and probably bearish for the dollar going forward.